Ladies and gentlemen, good day and welcome to Gopal Snacks Limited Q1 FY'25 earnings conference call hosted by JM Financial. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumanyu Saraf. Thank you and over to you, sir.
Thanks, Steve. Good afternoon to all the participants. We are pleased to host the earnings call of Gopal Snacks Limited for 1Q FY'25. From the management, we have with us Mr. Raj Advani, CEO, Mr. Mukesh Shah, CFO, and Mr. Naveen Gupta, who's the Head of Sales. I would now like to hand over the call to the management for opening remarks, post which we will follow up with the Q&A. Thank you and over to the management.
This is Raj Advani. Good afternoon and thank you for joining us for the earnings call. We hope you all got a chance to go through our investor presentation uploaded on the stock exchange. We will share our key operating and financial highlights for the quarter ended June 30th, 2024. The fiscal year 2024 was exceptional for our company with the successful launch of our IPO. This motivates us to strive for higher growth in the coming years. During the quarter, we maintained our leadership position and continues to remain strong and growing in line with the market. In terms of segment performance, our strategic focus on increasing share of gathia and wafers in the revenue mix yielded results, with the gathia and wafer segments grown by 9.4% and 51.3% year-on-year, respectively in Q1 financial year 25. Wafer segment has reported highest ever revenue in Q1 financial year 25. In terms of state-wise performance, our core market has grown marginally by 3%. However, our focus has grown significantly with revenue growth of 35% YOY, which was majorly driven by our expansion in distribution network in our focus market. We have added approximately 100 plus distributors in our focus market in last year, in line with our strategy to increase our market share in focus market. As you are aware, one of the key drivers of our growth in our business is our distribution strength. In line with that, our distribution network has grown to 753 distributors, an increase of 170 distributors, making 29% YOY growth. This expansion has been pivotal in driving our revenue growth and market share. In terms of product launch, our team continues to innovate and we had 3 launches during the quarter. Were true products from namkeen segment and 1 product is from wafer segment. We have also ramped our product packaging in some of our products to be in line with market trends. I am delighted to announce that we have commenced corrugated box manufacturing operation at our Rajkot Ancillary 1 facility, which will help us to save of rupees 2 per box. This strategic move aligns with our vertically integrated strategy and aims to optimize costs further. For a manufacturing facilities perspective, we are at 4 lakh plus metric ton of capacity currently. We are utilizing the capacity of close to 35-40% at a blended level. We are focusing on new initiatives to foster innovation and enhance our product offerings, ensuring we uphold the true essence of our brand by introducing a range of products aimed at diverse customer segments and implementing a bold, dynamic advertising and branding strategy. We are on a exciting path to increase our market share and create value for our stakeholders. I will now request Mr. Mukesh to provide insight on quarter one.
Yes, thank you, Raj bhai. Good afternoon, everyone. So let me begin with sharing key financials and operational highlights for the quarter which has gone by. So this year we have started with a very positive note with our revenue from operations for Q1 FY'25. We stood at 354 crores, which reflects a year-on-year growth of 11%. This growth was primarily driven by our strategic expansion of the distribution network. We have added close to 170 plus distributors in last 12 months. If we see the growth trend in Q1, our speed of adding the distributor is 2.5x of the previous quarters, and that is going to continue in the quarters to come. When the gross profit for the quarter stood at 103 crores, which at a gross profit margin of 29%. If we exclude subsidy income, the gross profit margin is 28% compared to 31.4% in the same quarter of last year. There are a couple of reasons for reduction in GP margin. The reasons being we have witnessed an increase in raw material prices. Like chana has increased by 17%, potato prices has increased by 13%, urad has increased by 24%, which has resulted into which has an impact in our gross profit margin in Q1 of FY'25. As I mentioned in my previous earnings call also that we have increased our grammage sometime in Q2 of FY'24, so which has also a negative impact if we have compared it with Q1 of previous year. There has been an increase in grammage in couple of our ethnic products, which include gathia and namkeen, from 20 grammage to 25 grammage, effective July 2023. Similarly, in July 2023, we have increased the retailer margin from 50 paise to 75 paise in couple of our 5 rupees SKU, in gathia and namkeen product, which has impact in the gross profit margin. When we compare gross profit margin of Q1 of this year versus Q1 of previous year. Now coming to EBITDA. EBITDA for the quarter was 41 crores, which reflects an EBITDA margin of 11.5% compared to 15.3% in the corresponding quarter of the previous year. The reason being the increase in raw material prices, grammage, etc., which I have just explained. Further, there has been an increase in employee cost, which has come because of increase in employee headcount. Close to 140 headcount we have increased during the year, and there is an impact of annual increment as well. Overall, from a PAT perspective, we have our PAT for this quarter was 24 crores with a PAT margin of 6.9%, which compared to 8.9% in the same quarter last year. We are confident in our ability to achieve our goals and deliver sustainable growth in the coming quarters. We remain focused on creating value for our stakeholders through operational excellence and maximizing revenue. That's it from our side. Now we can open the forum for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avinash Roy from Nuvama. Please go ahead.
Yeah, thanks. This is Avinash Roy. My first question is on the margins. So in the coming quarters, in terms of the retailer margin which you have increased and the grammage also you have increased in namkeen and gathia, could we expect some level of cost control here, given the entire industry will face the gross margin pressure? So is it possible to reduce the grammage back to say 20 grams in namkeens and gathia? Similarly, on the retailer margin, I do understand one competitor came in that market a few quarters back. How is the competitive intensity with that player? Because the name is also very similar. So could the retailer margin be reduced now, given some time has gone and now there will be stability in terms of competition?
Yeah. So, Avnish, I will take the first question, what you have asked. For example, what you have said is that with the increase in raw material prices, are we going to take impact in the grammage reduction, etc.? If you see in Q1, we have taken that. Couple of our high price tag, we have reduced the grammage in Gathi and Namkeen product for the dispatches which has happened from our Nagpur plant. We have not touched the products which we are selling at our Rajkot from Rajkot, but slowly we are increasing the grammage wherever it is possible, and all the products which are getting sold outside Gujarat are at higher grammage compared to what we were selling in Q4. In terms of reduction in the retailer's margin, we don't foresee any reduction as of now. We'll continue to sell at 75. We continue to provide. Just a second.
So the 50 paisa movement was industry movement, not for any competitor movement. It was done by most of the players in the market, and that's the reason we have done, and we have revised based on the industry movement. So industry have movement from 50 paisa to 75 paisa. That's why we have done the same thing.
No, my question was on Gujarat only, because there essentially the competition has come. So
we haven't
to expect. Yeah.
We haven't considered that reason for any this margin change.
No, my question was on Gujarat grammage, cut in grammage. So what is the issue here? Because is it just the competition? Because then your gross margin in Gujarat will be much lower. So then how and when do we intend to come back to a better margin profile in Gujarat?
So if you see in Gujarat, if you have to see all the players, the offering is similar in all the players. It is not that it is because of one competitor there is a revision in grammage or increase in the margin. The entire market in Gujarat is at 75 paisa for 5 rupees SKU, and the grammage offering is 22 grammage and 25 grammage. So we maintain the similar stand as of now till the time there is a change or the industry take a call.
Avnish bhai, Naveen this side, let me give you a more clear perspective. 3 years back, margin on 5 rupees price point product used to be 75 paisa only, but owing to sudden spike in palm oil prices couple of years back, if you remember, it went up to 176 rupees per liter palm oil. So all industry players made a downward revision in retailers margin from 75 paisa to 50 paisa. However, when palm oil prices stabilized last year, so all the industry players again went to this 75 paisa retailer margin regime. This answers to question number 1. And the second one is, how do we contemplate to improve our margins in Gujarat, right? While the grammage remains either at par with the competition, and retailer margin also remains 75 paisa. So answer is that whatever new products we are launching, we are not doing only packaging renovation. Rather, we are taking care that our grammage is not so high. Our recently launched 2 products have grammage of 20 grams only in 5 rupees price point.
So I understand on the.
And when we, by end of September, we'll be having a packaging renovation complete overhaul. So we'll be taking grammage correction to the tune of 4 to 5%, not beyond that. In Gujarat.
Okay, so 4 to 5% grammage correction in most part of the Gujarat portfolio, right? By September.
Yes.
But that will be led by the market leader Balaji, right? Is that are they also kind of doing it? Is that the sense you're getting?
It will not affect us because we are getting a market survey done and market research done. Basis that we will take a calculated move in which SKU we need to reduce, we'll reduce, and most of the SKUs we will successfully reduce it.
And last quick question on Gokul Snacks. What is the impact now? Would you say that worst is behind? Any numbers you can share on how Gokul would have done in Q1?
See, we don't track their numbers as such, but we can clearly visible it from two elements at least. A few of our channel partners had left us and joined Gokul. However, 80% of them have rejoined us, number one. Number two, we don't have exact track of their numbers although, but what we get to know that averagely they were dispatching roughly 22 to 23 trucks on daily basis 4-5 months back, and now that rate has come down to 15 trucks, number one. Number two, we can see that they are migrating to other categories, like they are trying their luck in confectionery, they are trying to sell atta, they are trying to sell biscuits, they are trying to sell, drinks. So, wafers, biscuits as well. So, now they are digressing. So, their impact is mitigating now. We can clearly see.
Hello.
Hello.
Yes, sir. The current participant has been disconnected. We will move on to the next question. It's from the line of Pradeep Singh from Finterest Capital. Please go ahead.
Hello, sir. Can you hear me? Hello?
Yes, we can hear you.
Yes, sir. So what are the steps we are taking to increase our revenue as revenue has been flat year-on-year basis? I have 2 to 3 questions, but this will be my
Pan
first
India
question.
or Gujarat specifically? What your question is on Pan India?
Yes, sir.
So I think if you go through our earnings presentation, our revenue has grown by more than 11% year on year.
Yes, sir. But YOY basis, there is a minor increase. I mean to say that from the EBITDA margin last year was 12%. This year is 11%. So how we are looking forward to increase our revenue and as well as our EBITDA margin for this year? Can you guide us?
So, sorry, I couldn't get your name, dear.
So my name is Pradeep Singh. I'm from Finterest Capital. So my question is that how we are taking forward
Sorry to interrupt,
to
Mr.
increase.
Pradeep. Could you please pick your handset and ask the question?
Hello?
Hello.
Yeah, you're audible now.
Yes, sir. How we are taking the steps to increase our revenue as a year-on-year basis as seems flat, and what are the EBITDA margin we are improving on it for this current year and future also?
Sure. So let me give you perspective on revenue first of all, Pradeep bhai. Number one thing, on YOY basis, there is a growth of more than 11%. So it's not flat. Number two, we are doing in sales and distribution, we are taking 4 steps to improve on our revenue. Just to give you a perspective, our number of channel partners has gone up by 50% on YOY basis. And in Q1 of this year, speed of making new dealers is 2.5 times of what it was in Q3, Q4 last financial year. So coming to the footprint expansion, it is not confined to general trade alone. We just took, railway resource. We just took modern trade resource. All these numbers will start getting reflected in first month of Q3 itself. Railway, it has already started reflecting some numbers. Now, in S&D strategy as well as marketing strategy, we'll be unveiling our marketing campaign in one of our brands called Christos, as well as the mainline brand. Christos, we'll be unveiling our marketing campaign by mid of August, and Gopal by mid of September. Then, yeah. So we are contemplating healthy double-digit growth in this financial year. As far as EBITDA is concerned, Mr. Mukesh will throw some light on EBITDA.
So we, in last earnings call, I have given the guidance. EBITDA margin will be in the range of 11 to 13% for this financial year. And as Naveen ji said, we'll have a healthy double-digit growth in revenue.
Okay, sir. So my question is also on you have given a guidance regarding new markets. So how we are entering and expanding our new market and getting the clients and all that.
So as far as new markets are concerned, Pradeep bhai, we build to, should I tell the absolute number? No. So we went up in our number of channel partners. Just give me a second. 100 here and 40. By 150 over last year, Q1. And as I just shared that speed of empaneling new dealers in Q1 is 2.5 times of last year H2. And this speed is going to continue, and we have taken a goal of, billing 1,000 plus dealers at end of this financial year, which will be almost 80% more numbers. So our footprint expansion is on the right track. And our Nagpur plant is, instrumental in facilitating our footprint in focus states as well other states.
Okay, sir. So any guidance for this year? Means what are the areas we are exploring? What are the states? Can you guide on that?
So as Naveen ji said, our focus state and other state, the penetration is close to 15-20%. And we are increasing our footprint by expanding our distributor network. So we'll continue to focus on this focus state and other state. And Gujarat, we have 75 to 80% penetration. And there we have a couple of strategies where we are working to grow revenue in Gujarat state as well.
See, Pradeep bhai, any place which is in vicinity of 500, 600 kilometers from our Nagpur plant or our Rajkot plant, it's a strategic location to us. So we are clearly demarking which are the vacant areas, which are the potential areas, and we are doing this exercise of increasing our channel partner along with right sizing in sales team as well. Although we increased our headcount by 15% last financial year, but by end of Q2, we'll see a correction of similar percent in terms of headcount. Because we have started an exercising of, right sizing as well. So that has started yielding us some results with the help of technology adaptation, because we are upgrading our DMS system, which is now getting geotagging enabled. That is helping us to improve productivity of sales team. So, almost 50% of right sizing exercise is already complete.
Okay. Thank you, sir. Thank you so much. So you have also guided some on strategic partnership on supermarket and e-commerce. Can you throw some light on it?
So what we have done is, we have signed an agreement with one of the channel financing guys who give us support in terms of temporary finance, etc. So that's how the working capital management of dealer is taken care. Similarly, we are in discussion with couple of modern outlets guys. Retail, railways, we are present currently, where we are expanding our footprint. And e-commerce platform, we have now present in almost all the e-commerce platform. And
we are present in Zepto, Instamart, Blinkit, and railways. We are currently present in West Railway as well Central Railway. And by end of this calendar year itself, we are working a lot upon product customization, grammage customization, which is need to cater to that particular channel. So our revenue from railway channel itself will be on an annualized basis, it should cross 20 crores.
Okay, sir. So,
and as modern trade is concerned, we just hired a senior resource couple of days back only, who is on our panel now, who is carrying rich experience. We already have some terms of trade, understanding with major modern trade players, but we were, our ecosystem was not good enough to cater to those modern trade complexities. Now, since that resource is on our panel already, and we have been working on product customization as well to take care of these alternate trade channels. So surely numbers will start reflecting by mid of Q3 in those channels.
Okay, sir. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Mehul Desai from JM Financial. Please go ahead.
Yeah. Hi, good afternoon, sir. So first question on Gujarat. Obviously, you said overall growth will be in healthy double digits. If you can be more specific on Gujarat, which also has been in low single digit in this quarter, how do you see this trajectory moving to high single digit growth in second half? And if yes, what are the levers for this acceleration in Gujarat market?
So, Mr. Choksi, we can assure you that it will be high single digit growth in Q2, but definitely it will be double digit growth in Gujarat in Q3 and Q4. So the main levers will be channel management. Will see a lot of improvement, number one. Number two, we are doing product innovation as well product renovation. And number three will be definitely when we unveil our marketing campaign, brand campaign. So that will help us in improving consumer tractions. And last but not the least, just to give you a glimpse that Gujarat's wafer market size is more than 100 crores per month. And right now our market share is less than 10% in wafer segment. We are going to do some very exciting product renovation as well as trade campaign, channel engagement program around wafers category. So it's not a big ticket item alone, but it's a low hanging fruit as well for us. So wafers will be one of levers which will definitely give us healthy double-digit growth in Q4 and certainly double-digit growth in Q3 in Gujarat.
Understood. And secondly, if you can throw some light on key markets in your focus markets, some large markets like Uttar Pradesh and all, how have they performed while your overall growth is pretty strong? If you can give some flavor as to which are the key markets in this focus market which are driving this growth.
So our key focus markets are definitely Maharashtra, that being strategically stated since we have got a plant in Nagpur. Another strategic market is Madhya Pradesh, again in vicinity of Nagpur. And then Uttar Pradesh, being a large state from consumption perspective, remains one of our focus market. And Rajasthan, again in vicinity of our Modasa plant as well as Rajasthan, as well as Rajkot plant. Our Q1 growth on YOY basis has been impressive, more than 35%.
Yeah. So Mehul, one more input is that if you see, you have seen the number of addition of dealers. Incremental dealers we have added is 100 plus in focus market, and out of that Maharashtra has contributed almost 60% of the incremental dealer. So Maharashtra we are doing great. Our revenues are increasing. We have added 2.5x times of dealer in Q1 versus previous 2-3 quarters. These incremental dealers will start giving us revenue in coming quarters. Similarly, UP has performed very well in terms of incremental dealer. Almost 50% of the dealer count we have increased in UP in last 1 year. So these are the market where our focus has always been in increasing the footprint by getting quality dealer on board, and then increasing their revenue by doing range selling, etc.
Okay. And in this focus markets, Ghatia as a product is also getting showing a good traction, or is it more led to by other products like wafers, namkeens?
No. So Ghatia and namkeen is showing a great traction. There has been a 21% increase in the revenue, both in Ghatia and namkeen year on year.
In focus markets.
5%. 3 products are doing very great in our focus market.
Okay. Understood. And Mukesh, lastly on EBITDA margin side, if you can throw some light on how do you see gross margins? Do you think gross margins can sustain at current levels, or do you need to take price hikes to maintain current gross margin levels? And secondly, given that we have plans to up our marketing spends, how do you see that impacting our margins in 2Q and 3Q?
So, Mehul, the guidance for the rest of the year is that we'll maintain a gross profit margin range of 27 to 29%. This year, this quarter, if we exclude subsidy income, our gross profit margin reported number is 28%. We have taken certain price hike in this quarter where we have reduced the grammage of couple of our high big ticket product from Nagpur location. We have increased the price of besan, resulting the increase in price of chana, etc. So we continue doing that. We'll continue increasing the price, etc. wherever it is required. And as I said that in case there is a significant increase in the raw material prices going up, we will look for a grammage reduction as well, so that we maintain our gross profit margin in the range of 27 to 28%. In terms of EBITDA range, so we have our capital already invested in Nagpur and Modasa plant. We are incurring fixed overheads there. With the increase in the revenue, we will not incur any incremental overhead as such. We'll leverage on the existing fixed overheads. Whatever the increment cost will be, it will be towards brand and marketing cost, which will be in the range of 1.5 to 2% of our revenue. We see incremental EBITDA margin coming from the incremental revenue. So we'll maintain a similar EBITDA guidance of 11 to 13% by end of this financial year.
And this 11 to 13% includes subsidy, right?
Subsidy, as per our projection, it will be in the range of 10 to 12 crores for this financial year.
Okay, great. Okay, thank you so much, and good luck for coming quarters.
Thank you.
Thank you. The next question is from the line of Pooja Kabra from Gopal Snacks. Please go ahead.
Hello.
Yes, Pooja.
Yeah. Hello, sir. Thank you for the chance. Actually, I just wanted to know that can you please help to give the numbers on online percentage and offline sale percentage?
Online.
When you say online, it is a general trade or e-commerce?
E-commerce, yeah.
E-commerce, our contribution has been very negligible. We have started e-commerce in last 3-4 months. The revenue is increasing month on month, but the contribution as overall revenue is very negligible in terms of percentage.
0.1%.
0.1% only.
Okay, sir. Okay. Thank you, sir.
So we see this as an opportunity.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello. Hello.
Yes, please go ahead.
Yeah, I just wanted to understand, since we have increased our distribution expansion by 29%, what would be our fill rate to a lot of distributors that we have? Like, if they order, are we able to fulfill all their demands and everything?
From our Nagpur plant, our fill rate is staggering 90%, and from our Rajkot plant, it's also above 95%.
90% and 95%, right?
And in both cases, it is 95% plus.
Got it. So, what would be, let's say, we have certain revenue per distributor. So, how do you see that number going ahead? Let's say that number is at X. So, you see that number going to 1.5x or 2x maybe in a couple of years. How should we see that number? So, a lot of dealers will be under-indexed because they just got added to our system. So, how should we see that growth going forward?
Yeah. So, when we try to expand horizontally, so revenue per distributor will certainly go down for some period, right?
Right.
So, we will definitely do an exercise whereas we will divide our distributor into 3 segments. One is, above index, another is close to break even, and third one is below break even. So, we will work on a strategy called protect, correct, and create. So we keep protecting our smaller number of distributor till the time they reach a certain threshold level, and certainly when they get into League 2. So parallelly there will be another set of distributors which will be created who will require protection. So currently roughly 15% of our dealers are working at below threshold level. So we keep supporting them through various trade engagement program and channel engagement program.
15% is below threshold, you say?
Yeah. And their average turnover is, somewhere between 2 to 3 lakhs. Half a truck per month. Since this industry typically works on, truckload, half truckload concept. So when we dispatch our truck from our, factory, so we have to take care of our logistics costs as well. So we try to give minimum half truckload to a dealer. So the moment offtake improves or his market improves, so the dealer shifts gear and get into full truckload dealer kind of. That brings him on break even.
Got it. And I think I missed the quick commerce share of our revenues. What would be that number?
Sorry? Quick commerce?
Quick commerce.
It's less than 0.1% as on date. We recently, by end of March only, was our first billing to, quick com customer. So currently, it's roughly around 10 lakhs per month.
10 lakhs per month, that's it. Okay. And
we are in stage of, developing various products. We are very keen on improving our product management. So we are designing customized products to take care of not only modern trade, but exports as well, quick commerce customers.
Got it. And any insights on any other new facility that we want to build out? Because we're building distribution to Uttar Pradesh and everything. Right now we have facilities in Rajkot and Nagpur. So you have any intentions to build a new facility around Madhya Pradesh or Uttar Pradesh?
So not now. Currently, if you see our utilization percentage, we are in the range of 35 to 40%. And putting a facility comes with cost. So you have to start a fixed cost from day one. So our strategy is to make a market first, and then based on the market size, etc., we go for expansion. So currently, we don't have any plans to add any facility in any of this location.
Got it. And any kind of revenue number that you're targeting for FY'25? You've done about 1438 crores for FY'24. So should we look at that number, maybe 20-25% growth, or less than that?
So we have a different growth estimate for our different market. Overall, what we see is that double-digit growth, close to 12% growth in overall revenue in FY'25.
Got it. Thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Srinarayan Mishra from Baroda BNP Paribas. Please go ahead.
Hello, can you hear me?
Yeah, Mr. Mishra.
Yes, so drawing from the earlier question, what can be the peak capacity utilization?
So peak capacity utilization, we will currently our revenue will be 2 times of the existing revenue when we reach our peak. Yeah.
Okay.
Maybe it is only for wafers. There will be the peak. We are currently at a utilization of 59%. There, the capex requirement will be a bit earlier compared to any other products.
Okay. So, sir, the new products which we have been launching over last couple of quarters or even more. So, how has been the traction there? Because if we see last 3-4 quarters, the revenue has been flat. So, is there kind of cannibalization with old products, or new products are not gaining that much traction? What is happening with the new products?
See, Mr. Mishra, we launched 3 products in Q1. So, one was, we did a test marketing in Maharashtra. Both the two products belongs to namkeen category, and both were test marketed in Maharashtra. So one of the product has gone very well in Maharashtra, and yesterday only we started releasing in Gujarat as well. Okay. And one of the product did not do so well. And another product that was in wafer category, we launched by end of Q1 and last week of June. So exact offtake and traction has yet to be assessed.
Okay. So when you are giving the
Sorry,
go ahead.
In the current quarter, we already have launched one new product couple of days back in Gujarat, and we have a firm plan to launch another 2 products in the current quarter itself. And both are big ticket items. Market size is big for those products.
So generally, what has been your experience whenever you launch new products? So is there any kind of cannibalization with your existing products, or it's not that meaningful?
See, it depends. If I am launching a new product for which market share already exists, there is a huge market size for, say, some existing product, and I am new to that category. In that scenario, definitely we eat out competitors' market share. So, we are trying to figure out those products, whereas competition is present, we are not. So less cannibalization should happen. Sometimes we do product extension, whereas we already are present in that product category and we launch new variant and a new SKU. In that case, to some extent, definitely cannibalization happens.
So basically, the revenue guidance which you are giving for current year, so much of the growth you are seeing from net distribution expansion and not because of new product launches, right? So distribution will be the driver for revenue, at least for this year.
Yeah.
Okay. All right. And just one question, if I can squeeze in. So in terms of retailer margin, so as you move to new channels like quick commerce and online, so that how is the margin spread? So will it be lower, right?
No. Let me give you clarity on that. See, modern trade, e-commerce, these channels typically, definitely ask margin on markdown basis. But then there are two catch. One is intermediary is removed. Currently in modern trade, there are two large players in West India. We know all of those. Everybody of us know who are those two players. So in both the cases, intermediary will be removed, so that much margin will be saved. Secondly, in case of large contributing SKUs, we will come out with customized packaging with a different MRP regime. So we will not compromise definitely on our margins. Like when we go to railway channel, so you as a consumer can easily differentiate that a wafer packet of 10 MRP, what you get outside railway station, you get the similar grammage in 20 MRP within railway station. So, all those tactics are very common trade practices. So we will not take a hit on our margins.
Okay. So maybe it should remain the same and not go down.
Mr. Srinayan,
please
call back in the question queue.
Okay. Thank you, sir. Thank you for answering the question.
Thank you. The next question is from the line of Nitin from MK Global. Please go ahead.
Hello. Thanks for the opportunity. My question pertains to, again, on the launches, what we are have action. So, this is also more towards the family pack salience. So, we have a high concentration of rupees 5 and 10 packs. So, any effort we are also doing to enhance our family pack salience?
Yes. Whatever endeavor we will do into modern trade channel, quick commerce channels, definitely we will sell family pack products only, number one. Number two, even in case of general trade, we will be introducing, standy pack by end of Q2. So all those packs are family packs only. Number three, we are contemplating, some amount of consumer promotions on our family packs to improve traction of family packs. Another small tweaking we have done in case of our non-core states, whereas in Gujarat, which is highly competitive in terms of pricing, we have started keeping a differential MRP, whatever we are producing in Nagpur on family packs, to give a higher retailer margin. Simultaneously, our realization has also gone up.
Okay.
So if we say, for example, if we raise MRP of a product from 70 to 79, so we are passing on 6 rupees to the retailer, and we are retaining 3 rupees with ourselves at cost of consumer. Whereas consumer is willing to pay because still we will become either at par with the competition or still we will be little cheaper to the consumer versus competition.
Okay, you are saying that the 70 to 79, in the sense market competition is offering at 79, our product was priced at 70. So we are basically taking our family pack pricing to the competition level.
To some packs, to some products to the competition level. In some products, even after hike, our MRPs will be, consumer friendly.
Okay. ठीक है. This is good. Next question would be with respect to your marketing campaign. Can you throw some more light in terms of what all action we have planned around it? Like, have we signed up any celebrities, something like what we have seen in the industry by other prominent players doing it?
It's WIP and it remains confidential. We are in talk with certain agencies on this topic, so it will not be appropriate to divulge the details at this point.
Okay. Okay, thank you. And the last question is...
Okay, yeah.
Hello?
Yeah.
Yeah, the last question is with respect to the distribution expansion. So just wanted to know the profile of this distributor. Are they the existing category distributor, or we are sort of signing up a new distributor in this newer market?
Mix of both.
Okay. So, like, in case like we are creating a new distributor, don't you think there will be a risk element attached to it?
See, most of our distributors will gradually shift to channel finance, which we recently signed. So our risk element in terms of our monetary exposure will remain zero. As far as sustainability and longevity of that dealer is concerned, we have a proper SOP set with ourselves. So this is why numbers of dealers getting replaced has gone down to 5 per month.
Okay.
When we say that our number of distributors were 100 and today we are billing to 160 distributors, so there will always remain an element that we added 10 and 10 left us. But now that number who are leaving us has gone down to 5 dealers per month only, whereas gross addition is 30 per month, and the guys who are leaving us are 5 per month, so net new dealers are 25 months. So that is a very good number. That's the best in the industry, I would say.
Okay. Thanks a lot. One last question also with respect to this corrugated boxes.
I'm sorry
the
to
savings of...
Nitin sir. Could you
Okay,
please
no
go
problem.
ahead?
Thank you.
Okay.
Yeah, thanks a lot.
Thank you. The next question is from the line of Bhumin Shah from Samiksha Capital. Please go ahead.
Yeah, my question is to the Mukesh sir. So can you throw some light on the inventory which we are holding, and what are our payables and receivables as of June quarter?
So inventory, Bhumin, so normally at the start of the year and in the month of March, when the crop for chana and potato comes, we do holding of the stock, 3 months relatively for chana and 7 to 8 months of the stock for potato, etc. And even when we see advantage in terms of prices, there has been a bulk procurement of a couple of our commodity products. Currently, if you see the inventory holding days on an average, it is close to 40-45 days. In terms of payable, etc., our payment terms are mostly on an immediate basis. Within 7 days from the receipt of invoices, we make the payment to vendors. In terms of receivable, etc., we deal in cash and carry business, where mostly the advances come from distributor, and then we do the billing to our deal, etc.
Okay, and one more question regarding the interest outgo. So it was around 1.6 crore. So can we assume that it will remain same for this year, with every quarter 1.6 crore, or it can be higher also?
So interest cost will be in the similar range. Yeah.
Okay, thank you.
Ladies and gentlemen, that was the last question for today's conference call. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you. Thanks, everyone. Thank you.
Sure.